Hello everyone, I'm going to explain about the valuation of shares and the methods adapted to find the value of share, and it is important in this video one by one. The first we are going to learn about the meaning of valuation of shares. This valuation of shares involves determining the worth of the company's stock. This is essential for investors, companies considering mergers or acquisitions or any scenario where understanding of the fair value of company's equity is necessary. Importance of share valuation. The first thing is when you value share only, it will be helpful for the investor to decide whether the stock is overvalued or undervalued. Then it is used for assessing the value of equity in transactions like mergers, acquisitions, and buybacks, etc. It is essential for required for the purpose such as tax assessment, inheritance, and other legal institutions. Then benchmarking. When you value shares, it will be helpful for providing a basis for comparison with industry peers or historical performance. So the next thing is the differences between the valuation of goodwill and valuation of shares on the basis of different factors in this video. The first one is nature of asset, and a intangible asset representing the excess value of company. So as we all know, intangible asset representing the excess value of the company. Valuation of shares represents ownership in the company through its equity. So, and goodwill represents the excess value, shares represents the ownership. Then on the basis of purpose, both can be differentiated. Primarily used in mergers and acquisitions in case of valuation of goodwill, but valuation of shares is used for investment analysis, corporate finance and transactions. Then the key components are varied from goodwill to share. The key components of goodwill is brand reputation, customer loyalty, and intellectual property, etc. Then key components of valuation of share is based on assets, earnings, dividends, or future cash flows. Then different methodologies used for valuation. Goodwill is valued by using purchase method, super profit capitalization, and annuity method, whereas valuation of shares is calculated using NAV method, earnings capitalization method, DDM method, price to earnings method, and discounted cash flow method. Then impact on financial statements. So when you value goods, it is recorded as an intangible assets on the balance sheet subject to impairment testing, whereas valuation of share affects the equity valuation reflected in market capitalization and financial ratios. Then valuation of goodwill is used by accountants, financial analysis, and companies involved in various activities like M&A. Then valuation of shares are used by investors, financial analysis, corporate finance professionals, regulators, etc. Then frequency of valuation, typically valued during acquisitions and impairment test. Actually, shares are valued regularly in stock market during equity transactions. So focus on the basis of focus, the factor focus. In case of valuation of goodwill, the main focus is given on the excess earning potential of a company, whereas the focus is given on the company's equity in case of valuation of shares. Then outcome, on the basis of outcome, determines the premium paid over the net asset value in acquisition, determine the market value per share for buying, selling, and other day-to-day decisions. So these are all the various differences between valuation of goodwill and valuation of shares on the basis of different factors like nature of asset, purpose, key components, methodologies, impact of financial statements, frequency of values and focus and outcome, etc. Then the last one is methods. There are different methods are adapted for calculating this valuation of shares. The prominently used method is called net asset value method. As the name indicates here, the main focus is given to overall net assets of the company. Then the second method is called earnings capitalization method. Here, the main focus is given for the company's ability to generate profit. Then the third method is DDM, dividend discount model method. Then the fourth method is called PE ratio, price to earnings ratio. The fifth method is called discounted cash flow ratio. Under this method, shares are valued by discounting the expected future cash flows. So these are all the various methods are adapted to calculate value of shares. So hope you all understood the various methods, importance and the meaning of valuation of shares in a company. Thanks for watching.